The last few days have seen significant volatility in global stock markets. Here in Australia, on Friday and Monday, the stock market had its worst 2 days since the onset of the pandemic. It all came after the US posted higher than expected unemployment numbers, raising concerns that the world's biggest economy is slowing and a recession is on the horizon. If you've been seeing headlines about this and trying to understand what has gone on, but it's all seemed a bit like gibberish, well, you have come to the right place. In today's deep dive, I'll be speaking to Jericho, who is the Chief Economist at the Australia Institute, to explain all of it to us. Jericho, thank you so much for joining the Daily Aus.
No problems, Billi.
So we have seen global stock markets go down quite significantly. How did this all start?
Yeah, it all started in America when their July unemployment figures came out and the unemployment rate went from 4.1 to 4.3%. And that kind of just triggered off a massive amount of panic around the world as everyone sort of looked at US and thought, oh dear, something's going bad there. And everyone just, really started panicking very quickly.
And why is it that unemployment figures would trigger such a worldwide reaction?
Yeah, it seems a bit surprising, but really what it comes down to is a US economist called Claudia Sam. She'd been looking at recessions and she was trying to come up with a way of measuring recession or kind of warning that an economy is going to recession a bit quicker than the traditional method. The traditional method, you have to look at GDP figures, which are the entire economy. You have to wait for 2 quarters in a row, which is 6 months for them going backwards. So in a sense, traditionally economists were saying, oh yes, an economy is in a recession and it started 6 months ago. And she was like, well, that's a bit useless. How about we look at unemployment rates and see if we can work out there? And what she sort of did a lot of good research and worked out that actually when the unemployment rises by a half a percentage point, so like about 4.0 to 4.5%, when it does that in 12 months, that kind of triggers, that means you're basically in a recession town. And the thing was, when the unemployment came out at 4.3%, everyone was going, oh, wait on, that's gone up by more than half a percentage point a year. Oh, hell, does that mean America's in a recession? Everyone's going, America's in a recession. Sell. And that pretty much was what it was. It was just this sense of everyone realizing, oh, gosh, that's not good.
Do you think it was an overreaction at all?
Unfortunately, if you look at the history, the rise in unemployment fits really well with recessions. And I think it's a good method because, I mean, who cares about GDP going up and down? All you care about is what's happening. Are you able to get a job? Are you getting paid well for your job? Are you getting good hours? So unemployment is a good indicator. And I think it really does suggest that the American economy, because it's had, like here in Australia, high interest rates, is really starting to struggle mightily.
And can you just explain why what happens in the US economy impacts the rest of the world so significantly?
Basically, it's because the American economy is the biggest economy in the world. It's still much bigger than China, and it's massively bigger than anyone else. And so, the old adage was when America sneezes, everyone catches a cold. Now, it's not quite as bad, but certainly it's a case, especially in places like Japan, where when America struggles, that means they're going to have a real tough time because America imports a lot of stuff from a lot of countries. And if they're going into recession, if the people are losing work there, well, they're not going to buy as much stuff. And that means they're not buying as much from other countries.
I was going to ask about Japan because they had it particularly tough in the past day, right?
Yeah, I mean, Japan is a bit unique because the reason why Japan's stock exchange went down so much and a lot more than anyone else is because Japan at the moment actually has really low interest rates. They've got a funny sort of an economy. It's hard to match up with everyone else. But what happens a lot over there is investors borrow in Japanese currency, in Japanese yen, at very low interest rates and buys things over in America, invests in America. And so if America is going bad, that means they're hurt a lot more by America going down than other countries. And especially if it seems like as a result, the Japanese central bank might raise interest rates, that starts thinking everything into kaflooey, really. And so as a result, they really started panicking even more than here in Australia.
Right. And hearing you talk, it all sounds quite scary and quite bad. For someone listening who is not too familiar with global stock markets, how much of this is just part of, the normal fluctuation of a share market, or is this really completely out of the ordinary?
Yeah, this was a big one, especially in Japan, and because it was just so widespread. But we've seen today already in Australia, there's a bit of a recovery. It's not like we're having a Wall Street crash where this is in times. But I think more it's a case of there'd been a lot of markets and investors going along with a sort of almost a rosy-eyed view that, it seems like we're going to get rid of inflation but not go into recession like we normally do, like we did in the 1990s, like we did in the 1980s. And they're all thinking, good times ahead. And then this was a bit of a wake-up call that actually there's probably going to be a bit of slowing in the economy purely because we've had interest rates high. That's stopped everyone being able to go out and spend. And so I think it was more of a bit of a wake-up call. And hopefully that's all it is. But it certainly does, I think, bear warning for what might be ahead in the next 6 to 12 months.
So let's turn to Australia now. What has happened in the Australian share market?
Yeah, the Australian share market also took a bump when this news came out. And like often happens, you follow what's going on in America and Japan and Hong Kong. They sort of see what's going on there. And there is a bit of a herd mentality amongst brokers. But it has sort of recovered in this sense that certainly Australia is not as exposed as perhaps Japan is. But we certainly know that there are concerns within Australian investors and Australian economists about Australia's own economy and whether we're going to go into recession because, and this is something I've been tracking on our version of unemployment rate, we're also sort of tracking towards going up by that 0.5 percentage point in a year. And if that happens, we're kind of looking like being in a recession. So, there is a fair bit of concern still, even in Australia.
I want to look at recession in a second, but first I just want to look at interest rates, which was a big topic of conversation yesterday with the RBA's announcement that it will keep the cash rate on hold. Firstly, can you just explain what is the relationship between cash rates and the stock market? How do they link?
Yeah, I mean, the cash rate is, in a sense, the Reserve Bank setting the interest rate that it charges banks to borrow from them, which they then charge a bit more to us so we can take out loans. But it's a good guide of what's happening with interest rates. And you think if you're an investor, you can do two things. You can invest in the stock market and hopefully the stocks will go up and you'll get a good return. Or you can invest in bonds, which is in a sense taking out loans. And if the interest rate is going up, well, then it's a good time to invest in bonds, not a good time to invest in the stock market. And so with the Reserve Bank keeping interest rates on hold, it's basically said, look, and I think everyone is kind of the view, the next move will be a cut rather than a rise. And it seems like all our concerns over the past sort of 6 months of are we going to have higher interest rates seem to be on the wane purely because the Reserve Bank, like everyone else, is looking around the world and going, geez, things are getting a bit dicey over in America and dicey in Japan. These are big export markets for us. Let's not try and kill our economy if we got bad things coming our way.
Two more questions. Firstly, for people listening who don't invest and who don't own a home, so the cash rate or the interest rates don't directly impact them, how could what has happened affect them?
Oh, look, it's not directly. If you're working, you've got money in superannuation and superannuation funds invest in the stock market, but you really don't have to worry, especially if you're young. You're nowhere near retiring and stock markets go up and down. And in 30 years' time, you won't even remember what happened, this week. If you don't have a home loan, you're not going to have to worry too much about whether the Reserve Bank's keeping rates steady. But it does suggest if they're keeping them steady, it means they're not trying to slow the economy more. Mm-hmm. And that's a good thing because it means that they are actually worried about unemployment rising. And so they're already thinking about, okay, what can we do to make sure unemployment doesn't go up, you don't lose your job, and the economy keeps sort of growing nicely.
Now, lastly, you've mentioned recession a number of times, which we know is when there are 2 negative quarters of GDP. In your expert opinion, how likely do you think a recession is in Australia?
Oh, look, I mean, GDP has been not growing very well. I mean, the last GDP growth in a quarter was just 0.1%. I mean, that's basically an error away from going backwards. So the risks are certainly there. It's always a bit tricky with Australia because our exports in one quarter can give us a boost and then the next quarter they don't. That's why I like looking at the unemployment rate as well, and that has been moving up. So hopefully we won't see that. If the Reserve Bank had increased interest rates, the risk would have, I think, become a huge warning bell and sirens would be going off everywhere. I think they're very mindful of it and hopefully we can avoid it. But again, if America goes into recession, if Japan struggles, then you're going to see struggles in China. It's very difficult to miss that. But I wouldn't be predicting we're going to go in a recession, but certainly the risks are pretty high.
We'll be keeping a close eye on it. Greg, Jericho, thank you so much for joining us.
No worries, Billi. Really good to chat.